Welcome to another S&P 500 analysis. Today is July 24th, 2021. Last week, we saw the market took a dive on Monday. Then on Tuesday, we got a short squeeze, and all of a sudden, the next thing we know is that the market put in a new all-time closing high and putting in all-time high. So is this another period where the dip buyer proved to be the genius, or are we getting snooker? In this video, we're going to take a look at the price action and also the internal, and also I want to show you a set of graphs that I just generated, and just to highlight some of the stuff that the market might be planning. So stay tuned. Let's start with the weekly chart of the S&P 500. As you can see, I have labeled this last week. You can see the low to a high. We have seen the S&P 500 swing 182 points. But at the end of the week, it gained 84 points, a little bit over 84 point, 1.96, almost 2%. Also, the other thing to note is from the previous Friday close to the low of the week, basically Monday, the low of Monday actually went down 2% or 89 points. So you see that essentially what this market did is that it regained all the loss on Monday plus more, and essentially just double that, right? Okay, so that's how we got up to this all-time high. And we're going to talk about this price action a little bit later in more detail. But let's take a look at the weekly price action. Right now, you see this 10-week and also the 40-week moving average continue to trend up, and the price is still above this 10-week moving average. Now, although the low actually below the previous week low, so we do not have a one-time framing up, but we are seeing an engulfing candle, a bullish engulfing candle engulfed the past 3 weeks, right? So, and it is positive. So we maintain that uptrend on a weekly basis. Now let's take a look at the sentiment chart here on the VIX. On Monday, actually went above the 20 level, and it got actually the high was 25. And it came back down throughout the week and ended the week at 17.2. Also, the put-call ratio also went up above that 0.75, went up to 0.8. Notice how it pulled back on Wednesday when we have that continued short squeeze. The put-call ratio actually came back down to 0.55 area. And then on Friday, it closed back up at 0.6. And looking at this sentiment chart, you can see that the market participant was fearful on Monday. Then all of a sudden on Tuesday, they got a little bit of comfort. On Wednesday, then they got complacent again and putting back risk on. So right now, they are still putting risk back on, but not as aggressive as they were back on Wednesday. And looking at the New York Stock Exchange up-down volume, we could see how mixed bag the market is. So if you know on Monday, right, on Monday we saw a negative 7.3 in favor of the down volume, and then on Tuesday on the short squeeze we saw a positive 8.7 time in favor of the up volume. Then on Wednesday we saw 5.0, so 5 time in favor of the up volume. Then on Thursday the market continued to push up, and it was actually almost 3.5 times more down volume than up volume. Then on Thursday there were almost 3.5 times more down volume than up volume, while the S&P 500 closed with a gain. Then on Friday, the S&P 500 closed with another new all-time closing high and made another all-time high. And the up-down volume ratio was actually in favor of the down volume by 1.8 times. So you can see there are sellers in this market here, while the index is being pushed up. And we're going to take a look at it in a little bit more detail. And what is causing this probably is no surprise to you, but we're going to go and take a look at it just to confirm it to ourselves what exactly is happening, right? And also looking at the advanced decline, you see on Monday, the New York Stock Exchange and advanced decline is minus 2,513. In other words, there were 2,513 more declining issue than advancing issue. Then on Tuesday, with a short squeeze, we saw a reversal. There was 2,274 more advancing issue than declining issue. And then on Wednesday, we continue to see the advancer dominate the decliner. by 1,651. Then on Thursday, as the market getting a little tired, catching a swing, but it's still pushing higher, the advance declined. The decliner outnumbered the advancer by 1,273. Then on Friday, we saw 811 more advancer than decliner. And for the new 52-week high, 52-week low on Monday, the New York Stock Exchange actually saw a 87 more new 52-week low than 52-week high. And the last time we saw that was back here on May 13. Then on Tuesday, Wednesday, Thursday, and Friday, it came back up with the new high outnumber the new low. On Friday, it closed with 95 more new 52-week high than 52-week low. Now, looking at the New York Stock Exchange cumulative advance decline, although it did come up a little bit and stabilize, but we are still seeing a negative divergence between the S&P 500 and the cumulative AD line. So until this divergence get resolved, we still need to maintain caution in the market here because, this could reverse itself just as quickly as it, came up from this pivot low. And looking at the NASDAQ market, we see that NASDAQ 100 pushed to a new all-time high and also put in a new closing high on Friday. Now, looking at the up-down volume ratio on Monday, remember Monday it wasn't that bad. It was only about 1.5 comparing to over 7 in favor of down volume in the New York Stock Exchange. So the NASDAQ market relatively comparing to the New York Stock Exchange, was much more better performer on Monday in terms of the outbound volume ratio than the New York Stock Exchange. But then on Tuesday, we saw a 3.2 in favor of the up volume as the short squeeze took hold. And then on Wednesday, actually got higher versus on the New York Stock Exchange. It got a little bit lower, although it was positive. Here, it was 4.3 times more up volume than down volume. And then on Thursday, just like the New York Stock Exchange, it went negative and it was in favor of the down volume. So there was actually more selling volume than buying volume on Thursday while the index was making a gain. Then on Friday, pushed to up in a new all-time high and a closing high. We only got 1.01, essentially almost neutral, more almost even with the same amount of volume versus down volume. So that is not something to write home about, to tell that the market new high was accompanied by strength, by strong buying. Also on the advanced decline, we see on Monday, the advanced decline was actually minus 1,900. So it's almost 2,000 more declining issue than advancing issue. And then on Tuesday with the short squeeze, we saw 2,470 more advancing issue than declining issue. Likewise on Wednesday was 2,316. Then on Thursday, the NASDAQ, we saw 1,382 more declining issue than advancing issue. And look at Friday, only 51 more advancing issue than declining issue on Friday when the NASDAQ 100 put in a new all-time high and a new all-time closing high. And also looking at the NASDAQ new high, new low, you see on Friday, there was only 12 more new 52-week high than 52-week low. As you can see on Monday, it was actually 215 more new 52-week low than 52-week high. And the cumulative advanced decline line for the NASDAQ market, we see that continue negative divergence as the NASDAQ continue to push to a new high with less and less advancing issue. So right now we are seeing a continued decline in the cumulative AD line, although it did come up a little bit in the last few days, but still it is below this high here by a pretty wide margin. So once again, the sentiment chart tells us that the market participant was really fearful. We saw it coming, as we seen from the previous week, that we saw the VIX start climbing up and also the put-call ratio came up. What surprisingly is that we came down so quickly that the market participant all of a sudden got bailed out by the short squeeze. And they got complacent once again after Wednesday. Right now, although the market is moving up into a new high territory, but we know that the internal is getting weaker as the index getting higher. So that is a sign that the market is coming to an exhaustion. And also looking at this gap here, okay, on Friday, that could be an exhaustion gap. And we're going to talk about those price action a little bit more right now. Looking at this daily chart of the S&P 500, as you can see that we got this gap on Friday. Right, this gap basically took out the all-time closing high and put in a new closing high and also a new all-time high for the S&P 500. So, and with the negative internal, especially the up-down volume, we know that this could be an exhaustion gap because that could not be a continuation gap, especially when the market is already ran up this much. Right, so right now we essentially are looking at the possibility of coming up to this 4450. That is essentially this 200% extension from this Fibonacci retracement of this swing here, and we got extension of 4452.91 at the 200% extension. Okay, so that is one possible target on the upside. But for the downside, we're going to still continue to look for this to come back and retest this 4232.60 and then see would it be able to get another bounce off of that, because eventually we're still looking at these numbers here coming down to test that 4,000 area, possibly get below 4,000, because we got another gap here, right? We got another gap here that is waiting to get filled, and also there's another gap right here, right under the 38.2 area here. So that another gap that we need to keep an eye out for to get filled. And for the Nasdaq 100, the Nasdaq 100 actually gap up on the open on Friday. Did not fill this gap. There was there's a little bit of a gap left open between Thursday and Friday. So once again, we essentially is looking at this swing for the Fibonacci retracement and the extension. Right now, we are looking at this 1618 at 15,233 level. Okay, so that's the upside target, potential upside target. And if it could pull back, we are still looking for this thing to come back down to this level here at 14,000. Essentially, this trend line here possibly come down. As this trend line break, and we are basically looking at these lower level down here. Once again, we are basing these potential price scenario on the internal. Right? There's no black magic. I'm always trying to put together this scenario of the possible price action on the upside and on the downside. We are not trying to make prediction of where the market will go or will do. We're basically putting up possible scenario where the market might do or might go. We don't know which direction it will actually take, but if it decides on one direction, then we have some potential target for it to go. Yes, we are based the internal to give us the probability of what most likely scenario will happen. Not saying that it will occur, it's just a likelihood of that scenario over the other scenario. And here we're looking at the Russell 2000. You see the Russell 2000 pull back, dip below this low here on Monday and came down close to this low. Right? We're essentially looking for it to come down to the 2075, and then we got to bounce back up. Right now, it reclaimed the 2195 area, but what really you need to do is to reclaim this 2297. Right now, it's still making a series of lower low, lower high. Who knows? Right? Maybe it will break this and come up and break this this high, then it start reversing it and put in a higher high. But until that happens, we'll continue to look for downside on the Russell 2000. And the Dow Jones Transportation, likewise, it is still struggling to try to get back above this 15,000 level. And once again, we essentially are looking for a lower low, lower high, and it broke below this 14,242, but was able to close back above it. So we're going to see another test to come down and then get down to this 13,656. Now, if you're going to push up, we want to see would it be able to get back above the 15,000 and get above this pivot high here. And on Friday, the Dow Jones Industrial put in a new all-time high and also closed with a new all-time closing high. Previous Friday, it was 1.5 points shy from this high here. So on last Friday, it actually got over that and put in a new all-time high of 35,091.56. Okay, and it closed with a new closing high at 35,061.55. So right now, we basically have a unconfirmed Dow Daily closing high for the Dow Jones Industrial. And what that implies is that unless the Dow Jones Transportation come up to a new high, do not expect this high will hold for the Dow Jones Industrial. The caveat is that we saw the S&P 500 and also the Nasdaq 100 put in a new closing high. Because right now the index is basically being weighted with some of the same stock that are in the Nasdaq 100 and also the S&P 500, and such as Apple and Microsoft. So as long as those two continue to push higher, that will help propel the Dow Jones Industrial to a higher high. Right now, the market is basically being pushed by those large cap tech stocks. And we want to take a look at the heat map, and we could see what is actually going on, and also the new set of graphs that I want to show you that kind of give you a better look on what is actually moving this market. And here on the New York Stock Exchange Composite, you could see that although it did come back from the low of Monday and pushing up, right now the high is still maintained to be 16,708, unless you could get above that and put in a new all-time closing high. If we are going to see some sort of reversal in the near future, then I do expect the New York Stock Exchange Composite to pull back below this 15,800 and possibly come back down and test this 15,775. And not to leave out the Nasdaq Composite, you can see the Nasdaq Composite Index is also put in a new all-time high and closed with a new all-time closing high, and also left a small gap on Friday as well, just like the Nasdaq 100. Now let's take a look at the heat map for the S&P 500. As you can see, the heat map is looking pretty green for the S&P 500 on Friday. Right, but once again, we have all these big cap here, right? The FANG stock is really, making large gain on Friday that helped push the index up. And although, semiconductor kind of recovered a little bit on Friday, but we're still seeing weakness from Intel and also NVIDIA. Micron is a little bit of a neutral, okay? And once again, Tesla is still being sold. So right now, we are seeing Tesla continue to seeing selling pressure. All these Apple, Facebook, Amazon, and I believe Google also next week will be reporting their earnings. Pay attention on Monday after the close. Tesla is going to report its earnings. Okay, so be careful on that. And here's the heat map for the Nasdaq 100. So not much different from the S&P 500 of the large cap tech stock dominate, and the weakness from Intel and NVIDIA and Tesla. Now let's turn our attention to the dollar and the yield. Here, looking at the 10-year yield, see the 10-year yield actually came back up. Remember, it dipped below this 11.5 or 1.15. Came below this 1.2%. Right now, it's coming back to close to this 13 level or 1.3%. So we might see this thing come and chop around between the 1.25 and then work itself back up to the 1.4. Next week, FOMC, the Fed is going to meet, and they will make an announcement on 2 p.m. Eastern time on Wednesday of what their new policy or direction is on the interest rate and the inflation watch. Pay attention to the possibility of hinting a tapering. Remember, they were saying early on that they did not anticipate to see interest rate increases until 2023. Now we are essentially starting to hear more whisper about the possibility of raising the rate in 2022. But before the interest rate could go up or before they raise the rate, they have to scale back $120 billion into the market each month. They have to taper that back down to zero before they increase the rate. So, of course, I think the initial plan is that they're going to do a slow tapering, right? Maybe 10 billion a month and take a year to trickle that down from 120 billion to zero and then start increasing the rate by 1/4 of a point. But I think what the market will force them to do is they will force them to accelerate that tapering. Instead of 10 billion, we could see 50 billion a month, okay, of tapering and quickly reduce that to zero and then start increasing the rate 1/4%, because as the inflation get too hot and this market getting too speculative, they have to go and clamp down before it run away from them. Right now, a lot of people is already saying that they are behind the 8 ball. So we'll see what happens in the coming week. After Wednesday, we will see what the market reaction will tell us what the market is anticipating, what the Fed will actually do, not what they say, but what they actually will need to do and what they will end up doing. Because the bond market will always force the hand of the Fed. Because the bond market controls the long-term rate, the Fed could only manipulate the short-term rate. And here we see the dollar continue to move up. Remember, we're talking about this zone here that we anticipate the dollar to fluctuate between this 92 to 94. And I'm also saying once it get up to this 92.5 or so, start hearing the Fed talking the dollar down, because if we have a too strong of dollar, it will not be good for us and also for our trading partners. And here is the weekly chart of crude oil. I just want to show you this longer trend here. Essentially, we are still on this downtrend, even though recently we saw the oil price came off from its low, right, all the way up to close to $77 a barrel. But right now, we're essentially still looking at a little bit of an upside move and possibly come back up and retest this 75, 76 level before it pushes back down. Because if the dollar get too strong, then the oil will come down, right? The oil price will come down. Although right now we are trying to balance that supply and demand equation, but I think if the oil price is up, okay, too high, then those producers will start cheating and start increasing the supply and try to sell more oil to make more money. And that will kind of push the pressure on the price and push it down a little bit. So there's a little bit of a balancing game in the supply and demand side. But right now, with the reopening and everybody talking about the reopening of the economy, then we probably will see this demand side continue to dominate until the producers start pushing up more supply. Then we will see the price pressure come back in, and also as the dollar get a little bit more stronger before the Fed try to talk it down, then the crude prices will also come down based on a strong dollar. And looking at the precious metal first, looking at the silver price, remember we were saying about this potential bear flag, and we're essentially projecting this thing down below this 2471 area. I'm still looking for this thing to break below this 2470 area and possibly come down and test this low somewhere around this $24 level. And here looking at gold, the gold is still trying to hold this 1804 level here. You can see that it came up and come back down. Been testing this area here for the last week or so. So we're going to see, would it be able to get a bounce and push back up and retest this 1846, or it will finally break through and come back down, test this trend line, essentially come down to this level here somewhere around 1750, and eventually come to this level here, this area somewhere around $1,700. That's basically what I'm looking at. Then when it get down here, then I'd be interested in looking for swing long trade possibilities. Now, before I show you the new set of graphs that I generated, let's take a look at this multiple index chart here. And just to highlight, last Friday, we essentially saw the Dow Jones Industrial, the SP500, NASDAQ 100, NASDAQ Composite made a new closing high, all-time closing high. Now, here's that last Wednesday, right? This was last Wednesday, not last Wednesday, I mean the previous Wednesday, okay? This is the day that the NASDAQ 100 made a new closing high all by itself. This basically is what we call a non-confirmed high, right? Then we saw immediately a little bit of a pullback, and unfortunately, we pulled back too quickly, and we got this short squeeze going on right now, and essentially momentum kind of got carried away. So right now, we're essentially looking at these guys for the coming week. Will these continue to push to a new high, or will it reverse back? I know there are a lot of these large tech stock reporting next week. We might setting up to sell on the news here on a lot of these large cap earning report. I'm not saying that it will be disappointing. I think they will blow the number out, but it is the anticipation of, well, how much better you could do in the coming quarter, right? So I think that's the question that we need to ask, and that is what we need to hear on those full statements to see how much better could it get in the future. Because once again, the market anticipates with expectation of the future, not reacting to what happened in the past. Now here, the new chart that I generated, I basically went and wrote a little script for Thinkorswim to generate ratio chart. Okay, so right now, basically like this chart here is the ratio between the the QQQ, which I have here, to the SPY, the ETF for the S&P 500. If it go up, then that basically is implying that the QQQ is outperform or perform better than the SPY, over the SPY. So that's basically what it is, because a lot of people is basically, looking at relative strength and that sort of thing. That's, the best way to look at that is basically looking at the ratio, right, between the, with a reference to, let's say, the S&P 500, the cash index, or the ETF, or whatever. So I chose the SPY for now, right? So right now, when we look at this, the QQQ is basically outperforming the SPY, because we can see that it is actually moving upward. Now, then we look at the IWM, the ETF for the Russell 2000. You see how this line is coming down, right? This right here is actually to show us how weak the IWM is, or the Russell 2000 actually is compared to the S&P 500. So you can see just by the price chart itself, you can see it is kind of looking at a little bit of a divergence. But right here kind of tell you how weak it is, right? And the last time that the Russell 2000 outperformed the SPY or the S&P 500 is back here when it made this close to its new high. In fact, the day before that, before it put in a new closing high, was in March, on March 12, the last time that it put in a new closing high, all-time closing high, March 15. And now we are looking at gold. Okay, so you can see gold is also showing relatively weakness in comparison to the SPY. Not only this longer trend, but you also look at just on the Friday, right? You see gold is coming down in performance relatively to the S&P 500 or the SPY ETF. And by the way, if you are interested in a script for generating this chart here on your Thinkorswim, be sure that you subscribe to this channel and also turn on that notification icon, because I will put out a separate video talking about this script here, how you could import it into your Thinkorswim platform, and some of the parameters that you could adjust to use it if you want to compare to, instead of a SPY, maybe you want to compare it to the US dollar or some other stuff, or reference to gold. So So be sure to subscribe to this channel if you have not already subscribed. And if you have already been subscribing, be sure to turn on that notification icon. So when I put out that video, you will get notified that that video is available. Then you could go and get a copy of that script and put it on your Thinkorswim platform. And here's the silver, similarly to gold, right? You know, silver has also been underperforming the S&P 500. Now let's look at individual sector now. First, we're going to look at the industrial sector, right? So you can see the industrial sector is kind of flat right now. It's not going down. It's sort of flat, right? Okay. It was underperforming for a while, and right now it seems to be flat. And here's the transportation. We know that the Dow Jones transportation been weak recently. And right here kind of depict exactly how weak it is in comparison to the S&P 500. Although, yes, it is kind of flattened out here right now. But look at this entire period at the end of May to the beginning of July here. And here's the utility. You see how utility actually outperformed the S&P 500 for a little while here just recently. Right now it's kind of pulling back a little bit, but it is sort of trending up here a little bit. So we'll see if the XLU continue to move up, and especially this ratio here continue to improve. That kind of tell you that there is a little bit of a flight to safety or defensive move in terms of the market participant, even though we are seeing these new high from the S&P 500 and the NASDAQ 100. It does kind of tell you that the recent high from the NASDAQ 100 and the S&P 500 is not as what it appears to be, because there is some flight to safety or a defensive move from market participants. And here we are looking at the XLF, the financial ETF. You can see it's also been quite weak, and right now it's kind of a little bit flat. Right now, I wouldn't be surprised that it continue to move down with the continuation of weakness here, because I think the FOMC meeting, they will try to maintain the posture of saying that they're going to hold the interest rate near zero until 2023. But we know that is not going to happen. And here's the ratio of the banking stock versus the S&P 500. As you can see, it's been quite weak recently. And this is the regional bank, those smaller banks. And here is the tech, XLK, right? Just like the Q. You see how strong it is relative to the S&P 500. And here's the semiconductor, right? The SMH. So if the SMH is as strong as the other tech stock, then we would see the SMH be moving up. But instead, we are not seeing that, right? We're actually seeing a little bit of a pullback on this ratio here. So the semiconductor stock, although we talk about this chip shortage and everything else, it might not be a benefit to the to the chip company. And here's the healthcare, right, relative to the S&P 500. It says it's been doing better, right? Okay. Although at one period of time it's pulling back, right now it seems to be coming back up again. So is this because of the Delta variant of the COVID-19? Who knows? And here's XLE, the energy sector, and you can see energy being quite weak. But surprisingly, natural gas is so strong here. I can't understand why. Right? If you look at this UNG, is way outperforming the S&P 500. Way back here at the low of April 5th, you could see that it's been moving up. And here the oil service is also weak. And USO is holding on because the oil prices is holding up, right? Recently it's been moving up, although it is giving up a little bit ground here on this pullback. And here's the steel ETF, right? We are looking at this infrastructure bill coming due. Maybe that might be in jeopardy. Who knows? Because we are not seeing this coming up like this. So we just have to wait and see. And here's the real estate, right? We saw a little weakness early on in June, and right now it's coming back. Okay, so we don't know what's going on here. We see would it come down and take out this low here. If it does, then maybe we are in a period of increasing weight pretty soon. And here's some material. Yeah, what is going on with the infrastructure bill, right? The material is way down, way underperformed the S&P 500. And the home builder also, right? We're saying that there's a shortage of home for people to buy, and we got all these, speculative buyer bidding up these home prices. It is not making that much of a strong move here for these home builders. And again, this is the oil exploration. I guess nobody interested in exploring for oils right now. And here's the retail. The retail been kind of flat, if you notice that, right? Throughout this entire period from end of March to the present right now. And here's the consumer discretionary. Though we see a period of increasing performance here, but right now it seems to be flat right now. And here's the consumer stable. We saw this peaked up a little bit recently. Now it's pulling back. Just show you the new chart that I generated. Let me know what you think. I'm just kind of still looking at these ratio charts to get a better understanding of what's happening here. Definitely, we could see on the obvious is the tech stock. And even though the tech stock is pushing and outperforming the S&P 500, not all the tech stock is outperforming the S&P 500. One notable sector is the semiconductor. So we are seeing a mixed bag of things, and that seems to, agree with some of the stuff that we are looking at from the internal. Right? So yes, the market appear to be, making new high, and it's good for evening news headline. But if we look beneath the surface, it's not all that great. Be sure to smash the thumbs up and help me promote and share this video. Thank you for watching and stay safe.